Can you believe this? They make up more than 2/3 of all operational satellites in the sky as of right now. So if you happen to catch a glimpse of one, there's a 67% chance that it is owned and operated by Starlink, aka Mr. Elon Musk. What's up, apes? Welcome back to another edition of the 𝗪𝗚𝗄𝗚 Daily Podcast of the Day. My name is David. Thank you so much for joining us here once again on this beautiful Tuesday, what day is today? September 17th, 2024 at approximately 7:21 p.m. We appreciate you guys for joining us here today. Love all you guys who are commenting, liking, subscribing, and doing everything that you can to boost our algorithm so that I can keep my job. We absolutely love to see it. And speaking of keeping jobs, we got a lot to talk about here today related to the U.S. economy. Now, we're not talking about really anything related to jobs here today, but that was my segue into the economy. So if you don't like it, go kick rocks, I guess. But nonetheless, we got a lot to talk about here. So great day for the WSO Alpha portfolio. Literally the best return possible, if you ask me. The WSO Alpha portfolio is up approximately 69 basis points on the session here today. Yes, apes, that is right. 0.69% return, which not only is the nicest return that you can get in a given day, it also outperformed the S&P, the NASDAQ, the Dow, and not the Russell, unfortunately. Damn, dude, these fucking small caps are putting up big numbers lately. What we're seeing on the index side is the NASDAQ return of about 20 basis points for the session. S&P 500 was basically flat, up 3 basis points. The Dow, not that anybody cares, was down 4 basis points. And the Russell 2000 up 83 basis points. So the WSO portfolio is led by strength from Enphase Energy. Now, solar stocks got a particularly large boost here today because in recent days, the odds of a 50 basis point cut have skyrocketed. So now markets are currently pricing for a higher percentage chance of a 50 basis point cut at today's meeting. I'm saying today because it is tomorrow, but you guys are probably going to watch this tomorrow, so let's go with it. Let's pretend it's Wednesday. So yeah, right now the odds of a 50 basis point cut sit at 64%, a day prior 62%, and the day before 34%, so nearly doubling in about a week or so. So pretty ridiculous right there, but some of the underlying economic data that we saw today is definitely going to be part of that explanation. So instead of wasting time while I continue to yap, let's go ahead and move right through things so that we can get that sooner rather than later. Get into some of the banana bits. So like I just said, actually, that was a great segue for me too. This first banana bit is just going to be a link to some trading activity that indicates how analysts and investors are positioned going into the rate cut tomorrow, why everybody's betting big on a 50 basis point cut, especially in the interest rate derivatives market. At the same time, mortgage rates are continuing to decline, and this is spurring a whole lot of excitement from home builders. Affording a home, that's a whole different story. It's still absolutely next to impossible. Trust me on that. It is essentially impossible unless you want to get fucking completely dicked down by your rate like I chose to. But nonetheless, declines in mortgage rates are once again starting to spur excitement from home builders. So hopefully they can actually start to build these houses that will effectuate an actual change in affordability and bring down prices via an increase in supply. Moving on down below, Starlink satellites. Can you believe this? They make up more than 2/3 of all operational satellites in the sky as of right now. So flying over you are a bunch of low Earth orbit satellites, and if you happen to catch a glimpse of one, there's a 67% chance that it is owned and operated by Starlink, aka Mr. Elon Musk. Speaking of Elon Musk, Neuralink. This is his kind of a brain therapeutic company. I don't even know how to describe it. I guess it's like a brain hacking kind of thing. It's their cyborg business. They're going to turn humans into artificial intelligence robots. I think that maybe that's what the Tesla Optimus really is. It's just a sneaky way for Elon to get us, a little bit comfortable with the idea, and then bang, we're the robots actually for the super rich. Nonetheless, Neuralink just received a breakthrough therapy designation from the FDA for this fucking sick device right here. It's called BlindSight. Basically, what this promises to be is a 100% cure to blindness. Well, I don't know if 100% is going a little bit too far. Basically, as long as your visual cortex is still intact, your optic nerve, like mine, can be totally fucked. You can have been blind since birth, and with this device, allegedly, you're able to see. So for people like me who are legally blind without my contacts or my glasses on, and probably, my vision isn't correctable to 20/20, so I can't even see what I look like right here. So, if my hair is out of place, now you know why. But nonetheless, this would be a great thing because my eyes are just going to degenerate for the rest of my life. So this is great news to know that I probably won't ever have to live completely blind, even when I am completely blind. So still fantastic thing to say. Shout out to all of my fellow glasses wearers out in the audience out there. Okay, meanwhile, Amazon, I don't know if they woke up on the wrong side of the bed the other day, but Andy Jassy decided he just fucking hates everybody. He came out here and basically said, Everybody has to go back to the office 5 days per week. So if you're a corporate employee at Amazon, RIP to working from home. You were one of the leaders on that, but now you're completely fucked. You can't do it anymore because Andy Jassy doesn't want to let you. Now, at the same time, there are exceptions for, basically if you just get approval. And I'm sure, anybody who's a very high production worker or just a valuable member of the team that works from home and will quit if they have to go into the office 5 days a week, I am certain that they will be allowed to stay home, but it's going to be one of those things that you have to earn instead of just, a given thing when you join a company. Finally, this was our interesting story of the day. Now, I don't know if I necessarily trust my source on this one because it was just Old Rose Instagram account, which some of you might be unfortunately familiar with. Great account nonetheless. What am I saying? So they did this... might have been a joking interview. They might have totally just trolled me, but nonetheless, there was an interview with Tucker Carlson, and they basically asked him to play a game where he would either answer a question or put a Zyn in his mouth or a nicotine pouch in his mouth, and he went on this diatribe about how he doesn't like Zyn because it's owned by Philip Morris, and their political donations are, not necessarily his political affiliation. So he came out and just kind of almost accidentally or just brushed by it, but he made a comment in this video that he's going to be launching his own nicotine pouch brand. It's called 𝗟𝗚𝗡, so I am certainly on the lookout for that. I personally have been moving over towards Lucy's into Lucy territory. I got these breakers. I thought the breakers were more gimmicky because the flavor itself is really not what I'm looking for when I'm using this stuff. And it gives you a rush of flavor at a certain point. But somehow they were still able to ship to me these flavored ones in the state of Massachusetts, even though that stuff is illegal. But just don't tell 𝗪𝗲𝗄𝗃 on me, and I think we'll all be okay. All right, anyway, let's go ahead and move into our economic story of the day. Apes. It's not World War II right now. It's not World War III yet either. But Uncle Sam needs you. Picture me as that poster that's we need you. That's me right now. Uncle Sam needs you, and we need you for a whole lot more than just going off into a foreign battlefield and dying in a combat zone. We need you to start spending some more money. So, the U.S. retail sales report just dropped on Tuesday, and the numbers were relatively rough. It wasn't anything good. It was better than expectations from the fucking bunch of haters that are economists, but still, it wasn't anything to celebrate. In August, U.S. retail sales increased by 0.1% on a monthly basis. Now, if you look at the chart, it's barely even visible. It basically looks like it's just a flat line. I also really hope the chart is on that side of me. In case it's not, let me do this too, just so we can edit it in later. But you can barely even see it when it's on the chart. It's barely even a registered gain whatsoever. Now, economists, being the bunch of haters that they were expecting a 0.2% decline in August nonetheless. U.S. consumers still showed out and beat the hell out of those expectations. Now, at the same time, the numbers were kind of they were caught in the middle of it's kind of a worst case scenario here, to be honest with you, because if retail sales were particularly strong, that would give us confidence in the U.S. economy. If they were particularly weak, that would mean Powell is going to cut by 50 basis points and my stocks are going to the fucking moon tomorrow, baby. But nonetheless, it's kind of right there in the middle. It's not growing strongly and it's not declining, so it's in this kind of weird limbo period where it's probably going to have no effect on the interest rate scenario going forward. Now, traders are once again pricing for 50 basis points as of yesterday, so they still very well could give you 50 basis points without really anything. Like we've been saying this entire time, we're pretty sure J-Powell's going to give us 50 basis points because this guy is a man of conviction. He doesn't wait around to do, to go big. He doesn't go home. He only goes big. So that's kind of what we've been expecting the entire time. Now, the economic data lately has probably, if you're going to look at this with an objective eye, probably leaning more towards a 25 basis point cut, but J-Powell, maybe he'll go balls to the wall on there. So the market wasn't too happy about it because it fell right within that limbo period. But if we expand our view a little bit, we can see the total retail sales increased 2.1% from August of 2023 to August of 2024. Now, not a great growth rate, but it's kind of right where we would really want it to be. Now, 2.1%, that would be consistent with a roughly 2% annual inflation rate, which is exactly what the Federal Reserve wants. So once again, not bad at all. The biggest detractor here was vehicle sales. Now, when in the chart in the piece, I have both retail sales as well as the PCE chart because they essentially show the exact same trend, but retail sales is a little bit too volatile because it's very highly weighted towards auto sales because there's such a high price tag, they make up a huge portion of the retail sales reading, whereas they're a much smaller percentage of the PCE index. So I included both of those on there so you guys can see exactly what's going on. Now in August, vehicle sales decreased 4.4% compared to July and 1.3% annually. So since August 2023, once again, auto sales are down, but if we think about it for a second, this might not necessarily be a bad thing. It could just be consumers, kind of getting the message. it seems like by about, late July, early August, consumers had kind of understood that rates were on their way lower. So it makes sense that in August, as everybody kind of learned, as everybody on Main Street learned that rates were going to be going lower, maybe they said, you know what, we'll hold off on that car purchase until we can get a lower rate a month from now. Now, that would make total sense. I would also be very impressed with the U.S. economy and consumers in general for being able to do so. But what I'm not impressed by it at all is our very, very, very weak performance on sales at food service and drinking places. Now, this is one of the most disappointing things that I have ever seen in my entire life. Consumer spending to get fat and drunk increased only 2.7% in August. Now, that is ridiculous rookie numbers. Like, are we even an obese country anymore? Like, this is some of the things that makes America beautiful. Now, the reason that we focus quite a bit on food service and drinking places spending is because this is highly discretionary. It's one of the first things that, consumers will cut if they're falling into economic or financial hardship. It's kind of like the marketing budget of a company. Very easy to cut when they're going into a recession. So if consumers are worried about their finances and the future of their finances, one of the first things they'll do is cut food service and drinking spending. Now, normal people don't refer to it as food service and drinking places. Those of us who aren't virgin nerds that have spent a lifetime in academia will call them bars and restaurants like a regular fucking person. Now, 2.7% growth, that might sound fine because it's, roughly in line with what we would expect for inflation. But if we look historically, the 10-year period from 2009 to 2019, because I wanted to exclude both the impacts of the worst of the GFC as well as the pandemic, and still be as recent as possible, we see that the 10-year average annual growth rate of food service and drinking places, bars and restaurants, is 5.4%. So that's the average monthly growth rate on a rolling 10-year, or the average annual growth rate on a monthly basis by the rolling 10-year period that we're looking at here. So what does that mean? Well, that means that August growth rate was exactly half of what that 10-year average period is. Basically, that's probably the worst sign in the entirety of this report because it's showing that discretionary spending is growing by roughly half what we would expect for this line item in the most recent decade of kind of economic quote-unquote normalcy, if there ever really is that normalcy. But that's one of the biggest concerning pieces of this report. Again, food service and drinking place spending, roughly half what the average is in the prior decade. So what does this mean? Taking it all together, retail sales, PCE spending data, and the Bank of America Consumer Checkpoint are all showing spending levels entering dangerous territory. They're still growing, but largely below average pre-pandemic annual increases. So that's why it's becoming a little bit of a concern now. The only solution here, I think, to fix this from a kind of macroeconomic perspective is going to be rate cuts. We already got that locked in later today, so stay tuned. We'll see how much they cut by. It's probably going to be 50 basis points. Mark that down on your calendar for when I said it right now. Go check out, by the way, the past 3 months of videos where I've been saying they should do 50 basis points, but whatever, nobody has to listen to me. Let's go ahead and move into the What's Ripe stock movers of the day. First and foremost, we have Flutter Entertainment, which probably doesn't sound super familiar, but let's get you guys fired up. Ever heard of FanDuel? Who wants to bet on betting? Well, if you did yesterday, then you made a whole lot of money. Flutter Entertainment up 2.9%, the Dublin-based gambling company owner of FanDuel, the most popular same-day fantasy sports app in the United States, just announced plan to acquire an Italian gambling company that's called Snaitech, I think. Snaitech. Snaitech. Its parent company is called Playtech. I don't know if they're having a fucking orgy over there, if it's an incest among the tech family or whatever, but Flutter Entertainment is coming in and breaking up the tech family. They are purchasing Snaitech from its parent company Playtech at a $2.6 billion price tag. Flutter Entertainment shareholders were hyped up with the stock up 2.9%. Playtech investors were pretty hyped too with the $2.6 billion infusion, with the stock rising 7.42%. This essentially shoots Flutter Entertainment to the top of the board in terms of market share in the Italian gambling market. So very good for them. Their entire strategy is to be like one of or the top player in basically every gambling market around the world. Whereas DraftKings is kind of like doubling down in the United States. FanDuel is like, all right, we're cool with being like the number one person, or number one, number two, number three person in many markets around the world, rather than just the number one person in the largest market around the world. So shout out to them. Interesting strategy, but investors are pretty excited. Intel Corporation, the stock was up like 7% when I was writing about it. Then it decided to fuck me over for the rest of the day. Fell down to close up 2.68%. So that was pretty annoying. But Intel, if we look at Intel a little bit more historically, they're on top of the world in the 1990s. Going into the dot-com bubble, they were absolutely killing it. Kind of like the Zoom of their day, but really that was Cisco probably is a better description because Intel had an actual business model at the time. But still, since the 1990s, I think the only person whose brand has fallen off more so than Intel is probably like Bill Cosby or something. Intel's decades-long turnaround plan since then, it looks like it's finally starting to work. Markets were loving the announcement that was made on Monday that they're going to be turning their foundry business into a subsidiary, opening it up to further investment and becoming more competitive in terms of producing chip designs and just becoming more competitive with Taiwan Semi and Samsung Manufacturing and all those other ones. Didn't even take 24 hours for orders to start to flood in. Amazon and the Pentagon, two pretty good clients, I would say. I don't think you can actually come up with two better clients besides maybe Microsoft and the Pentagon, or Microsoft and Amazon more realistically. Both signed deals with Intel and their new foundry business within 24 hours. So very busy 24 hours, but one that investors are loving. Speaking of investors loving a company, this stock up almost 900% year to date, even with yesterday's 11.06% decline. We're talking about Summit Therapeutics. They basically are kind of like that guy that gets dumped for being too nice. That's essentially what happened to this company. You know, being too nice, that's, I mean, cringy and gross and whatever. Summit Therapeutics, they're out here just trying their best. They're literally trying to cure cancer, and the market said, absolutely fuck you. Don't you know what you're doing to our other pharmaceutical stocks? Don't you know what you're doing to the pharmaceutical industrial complex? You know how much money we're making off of these cancer patients? Why would you ever try to end cancer? That's basically what the market said yesterday with this 11.06% decline. But really what's going on here is just around profit taking. The stock has more than doubled since September 6th alone. So that's 11 days and what about 8 trading days in that time period, and the stock has doubled. Like I said, it's up almost 900% year to date. So it makes sense that they're starting to see a little bit of a cut off the top. Once again, just profit taking as they come in and steal. All of Merck's launch, 𝗪𝗏𝗪𝗀 hit $25 billion in sales in 2023. And this company's latest kind of product to compete with 𝗪𝗏𝗪𝗀 shows that it works actually about 49% better, as I believe what the phase 1 trial data suggested. So, you know, some great stuff to see over there, but markets are putting that aside for now to take a little bit of profit off the table. Accenture down 4.85%, our last stock of the day, proving that George Orwell was correct and that Big Brother is always watching. This company can't even make slight changes to its internal hiring and kind of promotion policies without the market flipping a fucking lid. Stock is down 4.85% because the consulting firm announced Tuesday plans to delay promotions that are usually announced in December until June. And the reason that they did so is because they're waiting for, quote, better visibility of our clients' planning and demand. So, in other words, Accenture faces too much of the market's absolute least favorite thing right now, and that is uncertainty. So once again, stock down a little bit less than 5%. All right, getting into our Thought Banana story of the day. This one was pretty interesting, and it's something that we write about from time to time. I really like following this market because it's something very new, very niche, and something that I like a lot. I don't know if you guys are big podcast consumers out there, but I listen to them like it's my job. So this stuff is always fun to talk about. Imagine that you could go back to the 19th century in, Wigan, England. I just finished reading, actually, George Orwell's The Road to Wigan-Pier. And they talk a lot about coal mining. It focuses on the story of a coal mining town and their development in the aftermath of the Industrial Revolution and how, it was basically like effectively slave labor that they were kind of turning into. Very good story. So it got me thinking about this stuff when I saw these podcast deals today. Imagine you go back and tell a coal miner in 19th century England that, hey, a couple decades from now, people are going to be making generational wealth every single year by fucking talking into a microphone. Yes, you would first have to explain exactly what a microphone is, but you should have plenty of time as he wipes soot off of his entire body, out of his nose hairs, out of his other... We don't have to get into that stuff, but podcasters are back to making everybody else in the entire world extremely jealous. So, back in 2020 and 2021, Spotify leaned into podcasting hard, and the way that they did was by recruiting talent, kind of like a football team or like really any sports team. You want to get the top talent that you can afford, and so Spotify at the time had unlimited money, and there were basically no other competitors in this league with them, so they were shelling out contracts here and there to just about everybody to come on and exclusively produce their podcast on Spotify. Some of the biggest ones were Joe Rogan. They signed a $250 million deal back in 2020. Alex Cooper of Call Her Daddy signed one of about $60 million back then. The Obamas, they gave him like $25 million. Prince Harry and Meghan Markle got $20 million. These are some of the largest podcast deals of all time. But in 2024, these are starting to shoot right back up again. So if we go ahead and break it down a little bit, there has been a lot more of these, 7, 8, 9-figure podcast deals that have been signed in recent weeks. Some of the most important ones are, some like Travis and Jason Kelce's podcast. It's called New Heights, signed a $100 million deal with Amazon's podcast studio called Wondery. Wondery has been an independent studio for quite a long time. They themselves were bought by Amazon Music, and now it's just kind of like their own podcast, internal. It's basically like the Apple Podcast app, but owned by Amazon. So Amazon shelled out $100 million for exclusive rights to distribution and publication for Travis and Jason Kelce's New Heights. Dax Shepard and his show Armchair Expert earned him $80 million from Amazon's Wondery. Will Arnett, Jason Bateman, and Sean Hayes. Jason Bateman, why does that sound... Is he like an actor or something? I don't really know, but Will Arnett, Jason Bateman, and Sean Hayes got $100 million for signing a deal for their podcast Smartlist with SiriusXM. No idea how SiriusXM is getting this kind of money, but Joe Rogan also signed a non-exclusive $200 million deal with Spotify, which we actually discussed a couple of months ago. Link to that video in the piece there, but you can almost definitely find it if you just search WSO, Joe Rogan, Spotify, and it'll probably come up. But the one that I want to focus in on here today is Alex Cooper and Call Her Daddy, because this is one that officially changed its provider. So back in 2020, Alex Cooper and Call Her fucking Daddy, I can't believe that's the name of the damn podcast. Alex Cooper and Call Her Daddy signed a $60 million contract with Spotify in 2020 for 4 years of exclusive distribution, content rights. Basically, everything had to be on Spotify. Now, that contract is up, and Spotify wasn't willing to re-up the contract. So, what did Alex Cooper do? Well, she shopped around, and I'm sure she's very happy that she did. She just bagged herself $125 million to exclusively publish the Call Her Daddy show and every other show on her quote-unquote unwell network exclusively with SiriusXM. I can't believe that SiriusXM has the money to be throwing around this kind of stuff. You know what? Let's go ahead and take a second and look up SiriusXM's cash balance. I'm sure this is something that I can find hopefully relatively quickly. I want to see if they, what did we say? 100 and then 125. Do they have $225 million on their balance sheet? I might get embarrassed if they have way more than that, but let's go ahead and take a look. Cash and equivalents. 100 million it looks like. So they're taking out debt to sign podcast talent exclusively on their network, as if people are going to return to listening to radio from a fucking show that talks about interviews D-list celebrities, focuses on anal sex, and is basically the audio version of hardcore porn. That is exactly what the 60 to 80-year-olds that are actually still listening to radio want to hear. I'm sure that's going to get everybody back on SiriusXM. Nonetheless, they are taking this bet big time. Now, if you look at the market share of podcasting apps, Spotify still absolutely dominates at 35.40%, whereas all these other companies, Amazon, SiriusXM, and some of the other ones that have shelled out large dollar amount contracts in recent days, these are newer networks. They're nascent. They're trying to grow a platform. So that kind of tells us that maybe shelling out these big contracts for, exclusivity with the biggest shows in the entire world is a great way to grow a user base. But as Spotify kind of shows us, it's not a great way to monetize that user base. So we'll see if they actually continue to pursue this stuff going forward and if any of these deals actually pay off. That about does it for us here today. So it is now 7:43 p.m. Pretty good. Under 23 minutes here today. I'm proud of myself for keeping it a little bit more short and sweet. Like I said, guys, thoughtful emails will always get thoughtful responses. Shoot me a message, david@wallstreetoasis.com. I want to hear from you guys, want your thoughts on what we can do better, what we can stop doing, maybe get a new host or something like that. That might help out a little bit. Like, comment, subscribe, boost our algorithm so that I can keep my job, and I will see you guys tomorrow. Happy investing, happy trading. Bye now.